All right, so check it out. A lot of you never even heard of shorting a stock until the whole Robinhood debacle, right? And a lot of people still haven't heard about it, and even the many people who have heard about it due to the Robinhood situation, a lot of people still don't even completely understand what it means. So let's break it down. Short selling a stock is selling something you don't have. Okay? So the only way this works is it works within the realm of like big brokerages, hedge funds, things like that. People with lots of money, lots of investors, and the ability to buy and sell lots. Okay? And the way it works is because they have so much capital, they have so much revenue that they're able to do this. Now, you can't sell something you don't have, right? Well, that's in theory, okay? So what they're doing essentially is exactly that. They're selling something they don't have. So, okay, when you go into big hedge funds or brokerage firms, things like that, and you're going to invest your money, right? You can buy shares of stocks, right? Well, as a trader or an investor, what you can do is you can actually sell something you don't have. How do you sell something you don't have? Well, it's kind of like this transitional period. It's like I'm selling you in the idea that I'm gonna have it, but I haven't acquired it yet. So I'm selling you at this price. This is the price. I'm selling you at that price. So if I sell enough at that price, then I can turn around and buy it if you sell, right? Because if you sell, I've got to be able to give you the money. This is a tricky situation, right? You get yourself into this delicate spot, and this is where Robinhood got themselves upside down, because Robinhood did not have, and this is where banks like, oh goodness, the one I posted a video about it, a while back. Oh, like 2 months ago, there's the bank in Cali that went under. But this big bank went under because ultimately it was way over leveraged. It was way over leveraged with loans, mortgages, but also in addition to all that, everybody wanted to make the big media spin that it was over leveraged in crypto. It absolutely was, but it was over leveraged all over the place. Even before it invested in crypto, it was already teetering and it was in a delicate spot. It was thinking somehow somebody, I don't know who, the big the boardroom executives or whatever, somebody thought it was a good idea that, hey, we're already in a tight spot, let's leverage some more. Well, ultimately, the saying goes, the chickens come home to roost. At some point, people collect on that, right? You owe money. You've got to pay the people you owe. You've got debt collections. People close out accounts, things like that. People cash in investments, things like that. All these different possibilities that can happen. And the bigger the bank, that's the tricky thing that a lot of people don't understand. Like even Kanye West was talking about it, how badly he wanted to open his own bank because he thought, well, if I open my own bank, then I control my own money. I can actually control my status. I can control my money. Nobody can tell me what to do. And I can even potentially help others, the people I want to help. Which all sounds well and good, but the logistics of a bank are complicated. They're extremely tricky. The things that you have to consider is, okay, people do investments through banks. People put their savings in banks. They put their bank account, their checking, they get IRAs, they get retirement accounts. People are now, different banks are allowing you to invest in crypto through their banks. Well, the problem is that people do loans, car payments, house payments, personal loans. There's all these different things that come into play and that are considered, right? And with all these different factors and all these different monies that are moving here, there, and everywhere, it's hard to keep that balance. We saw this in the classic movie, It's a Wonderful Life, right? If you haven't seen it, it's a wonderful Christmas classic. But the bank was teetering because it had all these loans for the different people's savings accounts. That's okay. People put their money into a bank, and when you put your money into a bank, they leverage that money. That's why they want you to put your money in the bank. Because if nobody puts their money in the bank, they have nothing to leverage. So your money isn't your money. Now, the amount is still your amount, right? But if you take your check, they take your check and they turn it into liquid money and they put it elsewhere, right? It keeps moving. It's a cycle. Well, if enough people try to get money from the bank at the same time, that bank has to be able to have the liquid to back up everything. Most banks don't. Most banks don't. But most banks are so leveraged. Most banks are so leveraged, they're so leveraged, and they've got so much revenue coming in with interest fees and things like that, and bank fees and check fees and all these different investment fees and loan payments and all these different things, that they got so much money coming in that at the end of the day, they're making so much profit that it's not really a concern. It's almost never a concern, but sometimes it is. Sometimes. That's what happened with the bank in Cali. That's what happened with multiple banks. That's what happened to the bank in It's a Wonderful Life, that tiny little town, is all of a sudden everybody was like, I want my money. I want my money. I want my money. I hear the bank's in trouble. I want my money. Give me my money or I'm out of here, or I'm not leaving until you give me my money. And all these people from the whole town stormed into the little bitty bank in that little small town, and everybody stood there waiting to get their money. And if I don't get my money, I'm leaving. And what did he do? He literally reached into his own pocket and said, hey, look, I'll give you a little. I'll give you a little. I'll give you a little. He tried to balance things out, and he tried to assure people, trust in me. I'm your friend. I've been here. This is my town. Well, see, in a small town with only so many different people and all these things, it's like he was able to fix the situation. Big banks and big corporations, they're not your friend. They're an institution. They're a business person. They're a corporation. Nobody's going to say, oh, I should just trust you and you'll get me later. No, nobody's going to do that. Actually, the more in the media that it ends up, the more people get scared. That's why everybody's been running scared about banks lately over the last year. Do you realize if you actually look statistically, banks close all the time? This is not abnormal. There have been banks closing for decades. There have been less banks in the last 10 years than there were in the previous 10 years. There was actually less banks that closed in the last 10 years than there were in the 3 years before that. In literally 3 years, more banks than have closed in the last decade. But everybody's got social media and everybody wants to make a spectacle and everybody wants to blame crypto and everybody wants to blame this guy, that guy, every guy. And they all want to say, oh, well, did you know because it was an election year, it was probably the president's fault. It was probably the former president's fault. It's probably the new president's fault. It's probably everybody wants to point a finger. Okay. Now that we grasp that concept, hedge funds and brokerages operate in a similar fashion. It seems so weird because, like, how could it be so similar? But it is. It literally is. It's like they got enough money pouring in. They have to have a starting base. They have to have funds to get the company up and running in the first place. For the brokerage, the hedge fund, they all have to have a starting point. But that starting point is never enough to sustain massive growth. It's just a jump off point. That's why there's been several crypto firms that went out of business, because they do. Investment brokerage firms, they go out of business all the time. They've been going out since like the 70s. It's not abnormal. The only big difference is that now we have smartphones, now we have social media, and now we have all this media right at the access of our fingers that you didn't know what was going on in the 70s. You didn't know everything that was going on in the 80s. You didn't know everything that was going on in the 90s. Today you do. You know all about it. But what you still don't know is you haven't taken the time to really understand what a brokerage is or what a hedge fund is. Okay, so like I said, they operate similarly to like a bank. So ultimately they've got revenue coming in, they've got cash flow coming in, and they take that cash flow and they leverage it. So what they do is, because they've got so much leverage as they grow and get bigger and bigger and bigger, as they got that leverage and they got that power, they can simply tell you, hey, you want to buy stocks? They can short sell stocks. They can massive sell stocks. They can sell crypto. They can sell all these things that they do not have. So now if you become a partner and you became an investor in one of these brokerages or firms or whatever, you can begin to choose to buy or sell. Well, how can you just choose to buy or sell? You do. You simply choose to buy or sell. And what you do is you buy investments. You buy currencies. You buy crypto. You buy stocks. You buy indexes. You buy these things. But you can also choose to sell. Well, can you sell something you don't have? Yes. How can you do that? Ah, that's where it gets tricky, right? But you can absolutely do that. You can totally 100% sell something you don't have. So you'll get on there, right? And you'll see a trend. You're like, hey, man, this is going down. So you'll sell. You can literally sell something you don't have, bring in revenue, and as that revenue comes, then the brokerage covers the leverage. The brokerage covers the leverage. So they have enough people buying, they have enough selling, and they buy the shares, they buy the currency, and they cover the leverage. You don't get your hands dirty. You just make investments. You watch, you buy and sell and buy and sell. This is what traders do. This is what swing traders do. This is what I do on a regular basis. This is what me and my partners do. You are selling something you don't have because you are leveraging through the brokerage. Lately, we've been leveraging through a hedge fund. We're leveraging their pull, their power, their pockets. We are leveraging their money. It's not our money. We are leveraging theirs. What we are doing is we have partnered with them, so we are an investor through them, and we can trade through them. Now, do we actually have we acquired these cryptos? Have we acquired these currencies? Have we acquired these stocks? No. Now, do I have things in my own personal portfolio? Yes, but through this trading, I do not. But I don't need to, because that's what short selling is. You are selling something you don't have yet. And the firm, the brokerage, is covering the difference. Now, the problem back with Robinhood is they got into a situation, they were such a new brokerage and they were trying to do something. They were trying to play with the big boys, but they weren't there yet. Then there was these meme things that happened on Reddit and stuff like GameStop and such. And there's these things that happen like that. And so they lost a lot of money. They lost a lot of their money and they lost a lot of other people's money because other people were leveraging against things that Robinhood couldn't cover those losses. They couldn't cover those wins. They couldn't cover any of it. Now that's the gamble, that's the risk, that's the danger of short selling, is you've got to be able to cover it all. It's really interesting. It's really a dynamic situation, but it's really cool. And it's really exciting to be a part of if you can take the time to understand it. That's it in a nutshell. Is short selling is the idea of selling something you don't have in order to keep that trend, to make money and fluctuate the market. It sounds odd, but it happens all the time, and there's nothing wrong with it at all. There's nothing wrong with it. It just as long as either you're working with someone, brokerage or hedge fund, that can cover it. And if you are one of those big partnering, brokerage, you've got to make sure that the leverage is there. Don't get in over your heads. All right, ladies and gentlemen, y'all stay tuned. I'm going to keep coming at y'all with more and more and more. It's your boy Corey B, and I'm out.